If you've never bought a home before, closing day can feel like the most intimidating part of the whole process. You might know it involves signing a lot of paperwork, but nobody really explains what's actually happening, what all those documents mean, or what you're supposed to do when you get there. That's what this video is about. By the end of it, you'll know what closing is, what happens at the table, what you're signing and why, what you're paying for, and how to walk in prepared instead of overwhelmed. Let's start at the beginning. Closing, sometimes called settlement or consummation, is the final step in buying a home. It's the moment when everything you've been working towards becomes official. The loan becomes final, the money changes hands, and you become the legal owner of the property. If you're using a mortgage to buy, two things happen at the same time at closing. Your loan closes, meaning the lender funds the mortgage, and your home purchase closes, meaning ownership transfers from the seller to you. Both happen at the same table on the same day. Once it's done, you're legally obligated to repay the mortgage. That's why it matters to walk in prepared. Closing involves more people than most first-time buyers expect. Depending on where you live and how your transaction is structured, the people at or involved in your closing may include your real estate agent, your lender, though they may or may not attend in person, a title or escrow company, which coordinates the paperwork and handles the money, a closing attorney, which is required in some states, the seller, and their representatives. The person actually running your closing goes by different names as well, depending on where you live. In most of the country, it's a settlement agent or title agent. In Western states, it's often an escrow agent. In some Eastern and Southern states, a closing attorney conducts the closing. Whoever it is, their job is to make sure all the documents are in order, the money moves correctly, and the ownership transfers gets recorded with the county. At least 3 business days before your closing, your lender is required by law to send you a document called the closing disclosure. This is a 5-page document that lays out everything about your loan, the final interest rate, the monthly payment, the loan terms, and an itemized breakdown of every fee and cost associated with the transaction. 3 days sounds like a short window, but it's intentional. Federal law requires lenders to give you that time specifically so you can review everything carefully before you're sitting at the closing table with a pen in your hand. Here's what to do when you get it. Pull out your loan estimate, that's the document your lender gave you earlier in the process, and compare them side by side. The numbers should be very close. Some fees are allowed to change between the loan estimate and the closing disclosure, but others are not. If something looks significantly different and you weren't told about it, that's a question to ask before closing day. The closing disclosure is organized into 2 main cost categories. Your loan costs include origination charges, essentially what the lender charges to create and process your loan, including the application and underwriting fees, services you did not shop for, things like appraisal, credit report, and flood determination, and then services you did shop for, things like title insurance, your settlement agent, and title search. Other costs include government recording fees and transfer taxes, prepaids such as homeowners insurance paid up front, prepaid interest from closing your first payment, and then property taxes, and then your initial escrow deposit as well. So more on that shortly. First-time buyers are often surprised by closing costs, and the surprise usually comes from not knowing what they're actually for. Closing costs cover the professional services, insurance, and government fees required to legally transfer ownership of a home and fund the mortgage. They're not fees the lender just invented. Most of them exist because buying a home is a complex legal and financial transaction that requires a lot of people doing specialized work. Here's what the main ones actually cover. Origination charges pay the lender for processing and underwriting your loan, so verifying your income, your credit, and your financials. Appraisal fees pay an independent appraiser to confirm the home's market value. Title search and title insurance pay for a search of the property's ownership history to confirm the seller has a legal right to sell and insure you against any claims that come up later. Recording fees pay the county to officially record the deed and mortgage in the public record. This is what makes you the legal owner. Prepaid interest covers the interest that accrues from your closing date to your first mortgage payment. Homeowners insurance premium is typically paid upfront for the first year at closing, and an initial escrow deposit funds the account your lender uses to pay your property taxes and homeowners insurance going forward. Closing costs can sometimes be covered through a seller credit, but they don't disappear. If the lender offers to cover your closing costs, they're typically doing it in exchange for a higher interest rate. If the seller agrees to a credit, it usually means a higher purchase price. You're still paying, just in a different way. At closing, you'll sign several documents, and here's what each one actually is. The closing disclosure. you'll sign to confirm you received and reviewed it. A promissory note. This is your legal promise to repay the mortgage loan, and it spells out the loan amount, the interest rate, the payment schedule, and what happens if you don't pay. The mortgage or deed of trust. This document makes your home the collateral for the loan. So by signing it, you're agreeing that if you fail to repay the mortgage, the lender has the right to foreclose. The deed. This transfers legal ownership of the property from the seller to you. Once it's signed and recorded, the home is yours. Some of these documents require your signature to be notarized, meaning a notary public witnesses and verifies the signing. On closing day, money moves in several directions at once, and the closing agent is the one coordinating all of it. Here's the sequence. Your lender sends the mortgage funds to the closing agent. You bring your cash to close, the down payment plus closing cost minus any deposits or credits already applied. The closing agent then pays the purchase price to the seller and distributes the closing cost to the appropriate service providers. Any remaining funds go to you. So your cash to close has to arrive in a specific form. So most closings require a cashier's check or a wire transfer for the exact amount. Personal checks are typically not accepted. One important warning here, wire fraud is one of the most common closing scams. You may receive an email that appears to be from your title company or lender with last-minute changes to the wiring instructions. Do not follow those instructions without first calling a trusted contact, so your real estate agent or the settlement agent, using a known phone number that you already have on file, not one from the email. Confirm the wire details verbally before sending any money. Walking into closing prepared makes the whole thing go smoothly. Here's what to have with you. Your closing disclosure, so you can compare it to the final documents one more time. A cashier's check or confirmation of your wire transfer for the exact cash to close amount. Your government issued photo ID. Your checkbook in case there are small last minute adjustments, or if you want to set up an ACH payment right there at the closing table for your monthly mortgage payment. And then your co-borrower if you have one. So make sure everybody's present that needs to sign. You're also allowed to bring a trusted advisor, friend, or attorney if you want an extra set of eyes at the table. You have every right to take your time reading documents and asking questions. Do not let anyone rush you. Once closing is done, a few things happen that are worth knowing about. Save your entire closing packet somewhere safe. So that includes your closing disclosure, your promissory note, your deed of trust, and then your deed. Your first mortgage payment will go to your loan servicer, so the company responsible for collecting your payments. This may or may not be the same lender who gave you the loan. Many loans are transferred to a servicer after closing. In fact, I would say the vast majority of the time, that is the rule, not the exception. So if yours is, you'll receive a notice with the new payment information before your first payment is due. Your monthly payment includes principal and interest, but it may also include your property taxes and homeowners insurance if your loan has an escrow account. An escrow account is a holding account your servicer manages on your behalf. So each month, a portion of your payment goes in, and when your tax bill or insurance premium comes due, your servicer pays it directly. If you don't have an escrow account, you're responsible for paying those costs yourself on your own schedule. Even with the fixed rate loan, your total monthly payment can change over time if your property taxes or homeowners insurance go up or down. Your principal and interest stay the same, but the escrow portion can and does adjust. Closing is the finish line of the home buying process, and it goes a lot smoother when you know what to expect before you get there. So if you're a first-time buyer and you want to understand what your loan options look like and how to prepare for the road to closing, use the link below to book a call with my team. These conversations are most useful early, before you're under contract and the timeline gets too tight, because that's when you have the most room to ask questions and make informed decisions. And if you want clear, straightforward explanations about how the home buying and mortgage process actually works, make sure to hit that subscribe button as well. My goal is to help you make informed decisions with confidence and ultimately win with Wade. We'll see you in the next one.